So Morgan Stanley, who back in 2018 had a bear case for Tesla stock split adjusted of 66.6 cents per share, and no, I didn't misspeak, 66.6 cents per share back in 2018 in the bear case, have this to say. First positive surprise of the year. Tesla started its Independence Day celebration early with a positive 2Q delivery beat. By the way, it's true. They beat by roughly 1%. 33,000 lower inventory and a large storage beat to remind investors it's not just an auto company, which I think is safe to say what Morgan Stanley thought Tesla must have been back in 2018 when they thought in the bear case, split adjusted, it was worth 66.6 cents per share. 1. Deliveries beat, but second quarter deliveries came to 443,956 units versus Morgan Stanley's expectation, 427,000, and consensus expectation of 437,812. I mean, seriously, this is so close, it's barely worth talking about. Of course, it's never really worth talking about consensus expectations because Tesla never misses or beats. The analysts either underestimate or overestimate. While this is one of the first and only positive auto surprises for the year for Tesla, keywords here, automotive related, we still believe matching last year's delivery number would be difficult to achieve. Tesla would have to grow the second half deliveries by around 6% year over year to hold volume flat. 2. Inventory reduction. A $1.5 billion boost to working capital. Tesla delivered 33,000 units more than it produced in the second quarter, driving a 7-day reduction in days supply of inventory on a full calendar day basis. The 2Q inventory reduction substantially but not fully offsets the increased inventory seen in Q1. At an average transaction price of $45,000 a unit, this by itself drives about $1.5 billion in working capital inflow during the quarter, which is more than double what Morgan Stanley were expecting at $600 million. A 2Q forecast of $0.9 billion in free cash flow burn looks incrementally more conservative following this print. Energy storage deployments. A show stealer from today's update is the all-time record high energy storage number, 9.4 gigawatt hours, which was nearly double Morgan Stanley's forecast and also more than double Tesla's record quarter. As generative AI acceleration spurs a multi-generational increase in energy demand, electricity generation, and data center investment, we believe investors will begin to pay more attention to Tesla Energy, which we value at $36 per share, $130 billion, as the business uniquely positioned to benefit from investment in the US electric grid accelerated by the AI boom. You know, it's kind of funny, almost to the point of scratching one's head. I mean, this is true, but isn't it interesting that people are really now starting to recognize the potential for Tesla's energy business, not because it's inevitable the world will transition off fossil fuels towards sustainable energy generation, storage and supply, which is inevitable and obvious for economic reasons. We've covered this many times. Shout out to the folks at Rethink X, Tony Sieber, Adam Dorr and so on who've discussed this in detail and why it is economically inevitable. Everyone's like, whatever, ignore. But suddenly AI? Wait, you need energy to train AI? Okay, batteries. When they're not wrong, there's going to be a huge surge in demand for energy generation and storage. But there was also multiple trillions of dollars of storage that would have needed to be produced even without any AI just to transition the world. Kind of weird. Just wait till investors figure out the implication, not of how much energy AI will require for training, but the shit that AI will be able to do, say, for example, autonomy and the multiple trillions of dollars of opportunity that unlocks for companies like Tesla. Just wait till they figure that out. Tesla getting its mojo back? Little more than 2 weeks ago, our clients were preparing for shareholders to reject Elon Musk's 2018 compensation package, potentially setting up a change of management and strategy, compounding many months of negative news flow. Fast forward to today, clients are beginning to ask us about our positive catalysts into Q2 results and beyond. We're getting asked for our proprietary Tesla Energy model and even our humanoid robot total addressable market model. Is this the same Tesla from early June? Well, it's the same company, but maybe it's being perceived differently. Bro, would I not like to see their humanoid robot total addressable market model? If anyone happens to come across a copy, please, my DMs on X are open. I got to say again, it's quite interesting to see the narrative starting to not only change, but expand dramatically on Tesla. Suddenly, some recognition of the energy business, which again, just for the record, Musk has been flagging for literal years, is likely to grow at a much faster rate than the auto business and could grow to be the actual same size or even larger than the automotive business, which everyone completely ignored until suddenly a huge beat on energy one call. Oh shit, that's a lot. It's kind of weird. Like Musk says, hey guys, in the future, this is likely to happen. And everyone says, yeah, no, it's not. And then when it starts happening, people go, oh, fuck, that might happen. Yes, that's why I said it, bro. So people are now starting to cotton on to Tesla Energy. I wonder when they start to cotton on to the robotaxi opportunity. I must say, it is nice to see folks like Morgan Stanley publishing research that explicitly states that Tesla is, in fact, not just an auto company. I wonder if Steve Wesley believes that Tesla is, in fact, not just a car company. Oh, speaking of Steve Wesley, my ex-subscribers, by the way, if you're not subscribed, what are you doing with your life? Will have seen this, but for those who didn't, I always post early access to my videos. This one in particular, I'll just read the headline. In the article I discussed, geez, that's a long-ass video. Former Tesla board member Steve Wesley says he would vote no on Musk's pay package. Now, I'm not sharing this just to say here's a video I posted, because I eventually posted it publicly too, but to show you what the actual techno king of Tesla had to say about this very man. Check this out. One of the perks of being a subscriber is being able to read posts like this. Quote, Wesley was fired from the Tesla board long ago for being an absolute weasel. Now, I obviously can't personally verify or vouch for this claim, but it is a claim that Musk has made. An absolute weasel. I mean, strong words from Elon Musk. So let's see what Steve has to say about Tesla.
Your view on Tesla, having been a board member, a very, very, very early investor from the pre-IPO days in Tesla. And I'm really interested as to what you make of the sudden slowdown in sales and why.
Well, look, I think Ed's exactly right. Numbers better than expected, delivered 444,000 cars, up from 387,000 last quarter, but still down 5% year over year. Here's the big picture. Tesla's growth has slowed from an extraordinary 71% in 2021, 51% in 2022, down to 19% in 2023. This year could be the first negative year Tesla's ever had. That's why the stock's down 30% for the year. They've lost $700 billion in value since November 2021. This all creates huge pressure and some high drama for this big August 8th unveil of the full self-driving robo-taxi. So the big question is, can Tesla pull a rabbit out of the hat? We're going to see in about 5 weeks.
Well, what rabbit would you need? A lower, cheaper price model, rejuvenation there, or still waiting on the robotaxi?
Well, I think what you're likely to see is an all-new vehicle built on a new, smaller chassis. And I think that could be the chassis of the future for the new $25,000 car. And I think he's also going to show that full self-driving is almost ready to go. The big question is it going to be ready for the regulators to allow it to go on the streets throughout the U.S.?
So far, so good. Reasonable comments. I do expect we're going to see a new vehicle, and I do expect it's going to be a new platform. Tesla already told us this is going to happen. It's a modular manufacturing system, so there's going to be no shocks there, and it's going to be more affordable, and it's likely to be a dedicated robotaxi, although that platform may also feature consumer vehicles as well. But there's definitely going to be a dedicated robotaxi on a new platform with the modular manufacturing system, so check. I also believe that Tesla will indicate that autonomy is just around the corner. Now, the reason I say this is because I actually watch the videos of people using FSD, and I do in fact believe autonomy is just around the corner, so another big tick. As for regulatory approval, I once again want to point out the obvious. Regulators care about data. Tesla has mountains of the stuff. The vehicles are not yet at a point where Tesla themselves are confident that they're safer than humans under all conditions. However, they are collecting the data, and as the software improves, they continue to collect mountains of data, and eventually FSD will reach the threshold of fewer interventions per mile on average than a human, at which point it is, on paper, a superior/safer driver than a human. Of course, you do want a bit of a buffer in there. I don't think Tesla themselves will be pushing for FSD operating autonomous vehicles if the software is just as safe and capable as a human. But the good thing is they have the data, so they will know interventions per mile. And they'll be able to see, you know what? Wow, we're now twice as safe, 3 times as safe. Is now the time? I don't internally know what the threshold for Tesla is, but I have zero concerns about regulatory approval for FSD. Why? Despite the fact that Elon bad, regulators will care about the data. There are countless examples already of companies with vehicles that are less safe in many cases than humans operating autonomously in different pockets of the United States already. So we have proof that regulators are willing to approve autonomous vehicles in different pockets in the US. So if Tesla drops an absolute mountain of data on the laps of the regulators and say, hey, fuckers, check it out. Here's data, unequivocal, statistically significant, demonstrating that our software is X, Y, Z times safer than a human. And you've already approved this other thing that's, if you're lucky, as safe as a human. We're 2, 3, 4 times safer than a human. Approved, please. Thanks, bitch. Bye. Done. In short, there is no reason to have any concern about regulatory approval. When the software is capable and safe enough, Tesla's going to have so much data proving this that it's not a matter of opinion. It's a matter of the data proves this is safer than humans. It's approved. The end. Or maybe I'm extremely naive and there's enough corruption that regulators would in fact intentionally hold back Tesla just because Elon bad. As Musk himself pointed out on X, all that matters is improving Tesla's self-driving AI such that miles per interventions is much greater than for human drivers. When Tesla reaches that point, they dump the data on regulators' desks and the software is approved in an instant. Now, that's not to say the media aren't going to attack. I mean, bro, it's going to be ruthless. If you thought the Tesla FUD was bad now, just you wait until they begin operating vehicles autonomously, legally on roads in the US and elsewhere. The first incident that occurs, even if it takes quintillions of miles to happen, and it'll be less than that, but you get the point. The media aren't going to think about the statistics here, the large numbers, how many miles are already driven, and compare that to human driven. No, they're just going to absolutely go batshit insane. And Tesla knows this is coming. But the reason it's important to get these vehicles on roads and cop the arrows is because it will save lives, avoid injuries, disabilities, and fatalities. But make no mistake, regulatory approval, easy. With the data, done. But the hate stream media are going to have an absolute fucking field day. Trust me, it's going to be brutal.
Or will they do something a little different, like launch in China first? A lot of speculation. But if they can get these two things right, Tesla may be back on top for the next decade.
The stock up almost 9% in the session, but down 8% so far in 2024, down 13% over the last 12 months as I punch that into my Bloomberg. Remind us a little bit of your history of Tesla. You're a former board member, but at the time you were a board member, energy was not as big a component of the business. We've got a brilliant chart that I hope we can bring up showing the big jump in energy installation in the second quarter of this year. What did you make of that, Steve?
So Elon's got the big picture. It's not just a car company. It is an energy company. And frankly, it is an AI company. The energy.
Don't you love to hear it? Morgan Stanley, Tesla, not just a car company. Steve Wesley, who apparently was fired from Tesla's board a long time ago, also agrees Tesla not, in fact, just a car company, but also energy and AI. The narrative we are seeing shift in real time. I do, again, want to point out the extreme lumpiness of Tesla's energy business. As I've discussed recently, they're gigantic products. A single customer may potentially order hundreds of millions of dollars of megapacks. So depending on when a specific large customer, a whale, takes delivery, we can see a lot of volatility in their products. They are building megapack factories, so this is obviously going to trend up over time. But just on this chart, going back to Q1 2021, we can see here about a tripling quarter over quarter in energy deployments, a tripling in 2022, Q2 to Q3, a doubling again, and another doubling in the most recent quarter over quarter energy deployment data. There is no guarantee that Q3 sees another surge. It could happen, but it's important not to read too far into the tea leaves with Tesla's energy business over a single quarter because it is extremely lumpy. But to be clear, we will see absolutely phenomenal growth throughout the decade in Tesla's energy storage deployments. Phenomenal. We're talking probably at least a 10x or more in deployments, and that's being conservative. Just between Q1 2021 and at present, a few years, we've seen a 20 times increase in deployments.
Division is the biggest, fastest growing division of Tesla. It may become one of the most profitable divisions. And that's something we've been tracking for some time. But the big picture here is by 2027, they're going to be selling 30 million EVs a year. Every automaker in the world is going all electric. And if Tesla can get this $25,000 car into the market along with full self-driving, they and BYD are going to be the kings of EVs for a long time to come.
On this point, completely agree. As I've said in the past, going back multiple years, the future of the automotive industry in terms of vehicles sold per year or total revenue in terms of vehicles, whatever you want to measure it by, units, revenue on electric, whatever. Number 1, Tesla. Number 2, 3, 4, 5, 6, 7, 8, 9, and 10, almost exclusively Chinese electric vehicle makers. No room in the top 10 for companies like Toyota, Volkswagen, Ford, GM, Stellantis. Gone. Most of them will be going bankrupt. There'll be mergers, acquisitions, spin-offs, and a fuck ton of bankruptcies. In short, most of them not going to make it. Doesn't matter what they do. Now, it's too late.
Steve, I think we need to take a bigger picture look at electric vehicle sales all around the world.
All right, now, my spidey sense is tingling somewhat. I could be wrong here. I hope I'm wrong. Ed does his best, so he may not be completely ill-informed, but I've got a sneaking suspicion we may hear one of the two following falsehoods. One, hybrid sales are accelerating relative to electric vehicles. In other words, hybrids are the future. They're not. They're going away. They're ICE vehicles. Come back 5 years from now and I'll happily gloat and say, I told you so. And or another false claim that electric vehicle sales are slowing down. I hope I'm wrong. Ed, please make me wrong. But I keep hearing this false narrative, and it doesn't matter how many times you say something, it doesn't make it true. By the way, safe and effective. Wait, what? So let's see what Ed has to say about electric vehicle sales. Please, Ed, don't say slow down, and please don't talk about hybrids. My spidey sense is usually pretty good. I'm saying about a 69% chance I'm right on at least one of those calls. Hope I'm wrong.
You have many more players in China who are reporting really good numbers. A lot of folks, actually, I've been getting hammered on social media. I'll be honest with you. I've been getting absolutely hammered from all sides. Those that are very pro-Tesla, Tesla shareholders, owners, those that are anti-Tesla, anti-Elon. You can't win. But loads of them are pointing out that Tesla delivered more pure battery electric vehicles than BYD.
Yo, Ed, my man. I told you he's pretty well informed. I think there's not going to be any false narrative about EV sales slowing down or any bullshit about hybrids. Dude, I'm impressed. Let's go, Ed.
At the same time, I mentioned at the top, Elon Musk has talked about the challenge from hybrids. That's the market right now.
Oh, fuck. I spoke too soon. Oh, God. Oh, man. Just when I was giving it a wrap. God damn it. What an emotional roller coaster. What challenge from hybrids, bro? By the way, has Musk... What has Musk said about hybrids?
The legacy OEMs bringing more hybrid models online. The health of the market at large, please, with that context.
Look, the whole world is going electric. That's why we invested in Tesla in 2008.
Well, Steve Wesley coming in again hard with the facts. He's right. The whole world is going electric. Hybrids are a passing short-term fad. As I've said in the past, legacy automotive companies who today make all their money selling internal combustion engine vehicles and most likely see the writing on the wall, we're fucked. We should have been moving towards EVs 15 years ago. We didn't. We're fucked. Tesla's going to put us out of business. The Chinese EV makers are putting us out of business. We're fucked. Between now and going bankrupt, what can we do in the meantime over the next couple of years to milk a few short-term profits and get our golden parachutes? I know. Why don't we trick dumb, brand-loyal consumers, the kind of people with an IQ of let's say 85 or less, who are easily manipulated with advertising? Why don't we trick these dumb fucks who only want to buy a GM or only want to buy our vehicle because they're a GM guy or whatever? Why don't we trick these dumb fucks into thinking they're buying an internal combustion engine vehicle in which we've also inserted, no pun intended, a vibrator-sized battery and a bunch of other bullshit necessary, e.g. more expensive, less reliable, more stuff can break. Why don't we trick these dumb fucks into thinking internal combustion engine vehicle with a vibrator-sized battery in it is the vehicle for them? This will work over the very short term, but the cost to produce the internal combustion engine vehicle is going to plummet due to reversing economies of scale. More electric vehicles are sold, less ICE vehicles are produced, the cost to produce each ICE vehicle goes up, cost to produce each EV comes down. And as this happens, it's not going to make any economic sense to buy a hybrid a couple of years from now, and consumers won't. This entire narrative about hybrids is literally the result of legacy automotive companies trying to squeeze out milk for all they're worth the internal combustion engine for a couple more years before they go bankrupt. And funnily enough, in totally unrelated matters, the largest advertisers almost everywhere around the globe are, in fact, automotive companies. Of course, the media doesn't know who butters their bread, and so that would not at all influence any of the stuff we hear from them. By the way, I think the one exception is in the United States and maybe one or two other countries. Pharmaceutical companies are actually bigger advertisers because they're legally allowed to advertise on... safe and effective... sorry, I don't know. My train of thought, I don't know why I said that. So what I'm trying to say here is electric vehicles are the future. Hybrids are a passing fad. They're going away real soon. And the strategy from legacy automotive companies is literally trick dumb asses into buying hybrids over the next couple of years, then go bankrupt. That's their plan. And they're executing it flawlessly. While doing so, lean on the media to also discuss this false narrative about hybrid sales growing, outpacing EV sales, better than EVs and so on, because the fact that you spend hundreds of millions of dollars advertising may in fact give you a little bit of sway in their editorial coverage of certain technologies. I'm just kidding, that would never happen.
Saw that there was going to be this precipitous downward curve in the price of batteries. And that is why the whole world, every automaker going all electric. Now, you're going to see slowdowns. Tesla's in the middle of they call it the valley of death between the wildly successful Model 3 and the Model Y and the next generation of AI-driven full self-driving vehicles. As you move into that, I think they're going to do well. In the meantime, Tesla is becoming one of the largest sellers of energy in the world. They have applied and been approved to become a utility. They provide what are called mega packs to utilities all over the planet at an astonishing rate. When I was in the old days, you mentioned utilities. That was a boring industry. Now utilities are reshaping the world. That's part of why we've raised our new seed fund.
Talking in the old days, Steve, and before we get into your new fund, your old days, you've known Elon for a very long time. In your old days, you were on Capitol Hill. In your old days, I mean, you were serving as California co-chair for the Obama for America campaign. Do people come to you and say, Elon's the problem here when it comes to buying a Tesla?
So just to emphasize Steve's strong ties to California, which I don't know, but I'm guessing probably has the highest ratio of Elon bad to Elon not bad in the entire world. Just putting that out there.
Elon is without a doubt one of the most polarizing figures of the age, and then some. Having said that, he has transformed the global transportation industry. He's transformed the American space program. He appears to be on his way to co-leading a revolution in artificial intelligence.
So far, nothing but facts have been spat. The reason, of course, Musk is so controversial is because he has the most attention of anyone on Earth, bar none, and he has a pair of balls, which means that he is willing to share his opinions, especially on things that matter. Personally, did you know what I find a lot more offensive than opinions I disagree with? People who hold strong opinions on things that really matter to them, who are too scared to share those opinions because a few people may disapprove of them. That's what I find offensive. Weak pussies.
It's hard to cast too many doubts, but is he polarizing? Absolutely. Has he made his share of mistakes? Look at the Cybertruck numbers, form your own conclusion. But I still think he is likely the best person to lead Tesla into the new future.
Steve, you're looking for the next Tesla. Your firm, the Wesley Group, $100 million new fund. The focus is at the seed stage. Sounds tough. How do you find the next Tesla, be it the energy component, something to do with autonomy, something to do with electric vehicles, infrastructure?
So, controversial opinion alert. Tesla is, in fact, the next Tesla. What I mean is, you're looking for a company that's going to absolutely fucking dominate electric vehicles? Tesla. Energy storage? Tesla. Energy distribution? Tesla. Autonomy? Tesla. Robotaxis? Tesla. Humanoid robots? Labor? Tesla. AI, which essentially autonomy, the humanoid robot? Tesla. Now, some people would make the counter argument, but bro, everyone knows that Tesla's already going to win all those things, so they're not going to grow much, right? And I would say, obviously, you have not built a valuation model. The upside potential from here, on the back of autonomy and humanoid robots, the automotive business, whatever, energy, they're going to look like rounding errors relative to autonomy and humanoid robots. The opportunity in terms of value creation, growth in terms of Tesla, is so astronomical. Personally, I think you'd have to be absolutely mad to look for the, quote, next Tesla. Now, don't get me wrong. There will be companies, especially in early stages with seed capital, that could do a 100x, 200x, 500x, 1000x or more. But those opportunities carry with them enormous risk, especially of going to literally zero. I don't see Tesla going to zero, at least not in my lifetime. And I do see the probability of a 10x and then possibly over longer term another as being within the realms of possibility.
At the very nascent stage of a startup's life.
Look, investors all over the world are waking up and they want to invest in this new future of sustainability, EVs, green energy. We've raised a $100 million seed fund to help transform the world's largest industrial companies. And we're building on a 17-year track record of having raised 4 funds to invest in game-changing companies. So we're already had 9 companies go public, including Tesla, 3 other multi-billion-dollar exits. And I think our real secret sauce is the expertise we gained from having 32 of the world's largest energy, mobility, insurance, building companies as investors. They help give us unparalleled deal flow. We review about 4,000 companies a year, keeps us on our toes.
I mean, you've got money from Duke Energy, Origin Energy, Alaska Air, Vontier, many of them wanting sort of strategic investments here, Steve. Is electric vehicle the strategic place to deploy capital right now? Is it automation that you need to be more focused on? Is it energy? Where are you going to get the real bang for your buck, do you think?
Yeah, well, that's exactly the right question to ask. Let's jump right into that. There are unbelievable changes going on in the utility sector. EVs, autonomous vehicles, AI is causing the electricity demand globally to double by 2050. Utilities used to be boring. Now they've become the linchpin of the global economy. The energy is renewable energy, long duration power storage, virtual power plants. In the mobility sector, again, every company going electric, and that's because EVs this year will start costing less than comparable internal combustion engine vehicles. AVs are coming quickly. In the world of industrials, it's all about AI, robotics, making everything happen faster. We're in the center of those dramatic industrial changes. It's the most exciting time in the world to be an investor. Dramatic industrial changes.
Strongly agree with Steve's closing statement as well. It is the most exciting time in history to be an investor. That said, that statement has basically been true for the entirety of human history. Each new year, the most exciting time, because we stand on the shoulders of giants, we build upon technology, innovation, and knowledge. That's how humanity moves forward. Want more content? Early access? A bunch of perks? Click the links in the pinned comment. AG1 is awesome. I've been taking it daily now for more than 3 years. It's a great way to fill in nutritional gaps. It's packed full of vitamins, minerals, and whole food source nutrients. Plus, has prebiotics, probiotics, and adaptogens to improve gut health, regularity, and help your body handle stress. I'm always looking for an edge to help me feel and perform my best, which is why I haven't missed a day of AG1 for more than 3 years. And I haven't missed a daily video in more than 3 years. Must be a coincidence, right? Just try it and see how you feel. Click the link in the pinned comment or head to drinkag1.com/SMR and get yourself a free 1-year supply of vitamin D3 plus K2 and 5 travel packs. But don't take my word for it. This is what viewers of the channel had to say after trying AG1. I feel like I have a lot more energy since I started on AG1. By the way, viewer, that makes 2 of us. On to the next. Just got my AG1 in the mail. Legit feeling the effects after day 3. This viewer's been taking AG1 for 8 months and says, what an investment. Another. 3 months ago, I started AG1 and have been enjoying the evenness of alertness and energy that lasts the day. I just started the wife on it too. Are you convinced yet? I mean, hey, it's worth trying, right? Click the link in the pinned comment or head to drinkag1.com/SMR, or I can keep going. There's plenty more to come. This viewer, after about a month on AG1, definitely a lack of fatigue in the afternoon. Pleasant side effect is that my coffee intake has imploded and is almost down to 0. One more? Yeah, why not? I honestly feel younger and will be continuing to use AG1. This stuff really is crazy good. I didn't think it would be, but this stuff is awesome. It really is what everyone is saying. One more? Don't mind if I do. I've just received my 3rd month supply. I've drank it every day. I have so much energy throughout most of the day. I'm productive, started a new business, started socializing, refurbished a boat. It's no coincidence. Thank you for your persistence, your integrity, and your insights. Now look, these are not my words. These are not my testimonials. This is what you guys and girls are saying. Maybe it's 100% placebo effect. But even if that's the case, I think it's money well spent. Click the link in the pinned comment or head to drinkag1.com/SMR and get yourself a free 1-year supply of vitamin D3 plus K2 and 5 travel packs. If you're still skeptical, hey, I don't blame you. Everyone on the planet seems to be promoting AG1 now, but guess what? They weren't nearly 3 years ago when I had this to say privately to my Patreon audience before there was a relationship, when I was asked about what I was doing for my health, energy, and so on. Just sharing my genuine, honest thoughts about a product I'd recently discovered that was at the time called Athletic Greens, now AG1. If I could only recommend one supplement to take, Athletic Greens, and I'm not getting paid to say this, Athletic Greens is a fucking game changer. I cannot believe how effective this is. No longer having a lack of energy in the afternoons. It's fucking amazing. There's only one thing to recommend, seriously. Try Athletic Greens. You won't go back. So obviously, just like Elon Musk is a liar, a fraud, a con man, a scammer, a fake engineer, and Tesla's going bankrupt, you shouldn't trust that guy from about 3 years ago who, without any financial incentive, was promoting this product to his audience on Patreon when they were asking about health and what he's doing for supplements. Because obviously, there was some other reason he recommended that, obviously. Not sure what it was, but don't trust that guy. And all the testimonials, like my mental game has improved with AG1. I feel better than ever. I'm so impressed I've bought it for both my parents. I feel more focused and have better digestion. Incredible difference. No more afternoon fatigue. It's relieved gut issues. These are all just obviously fake testimonials from fake people. Right? Wrong. Just try it. Unless you hate yourself. If you hate yourself and you don't even want to risk possibly feeling better, this is not for you. But for everyone else, what's the worst that could happen? Try it for a month. See how you feel. It's a no-brainer. Just click the link in the pinned comment or head to drinkag1.com/SMR. You'll get a free 1-year supply of vitamin D3 and K2 plus 5 travel packs. And you'll take the colossal risk that maybe you might have a similar experience to some of the people whose testimonials we've read in this video.